Okay, good afternoon, everybody. Let's go ahead and get started. Just want to welcome everybody here. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there, just to let me know that it is indeed working. Hope everybody's having a fantastic afternoon so far. Again, hopefully your Father's Day weekend was great. Looking forward to this webinar today. Had a request come in to talk about smart money concepts and how to use liquidity zones and balances, how to identify breaks of structure, and so on. I think this will be a great webinar. This is one of my favorite topics to go over. I'm very passionate about this. This is pretty much price action 101. So I think this will be a really good analytical webinar. One of the things I hear a lot from newer traders who have been around for maybe a couple of months is, they're like, hey, I know how to trade the scanner, I get it, but I struggle with analyzing the charts. So if you're struggling with analysis on the charts, I think this will be a great webinar to attend. So let's go ahead and get started. As always, I need to remind everybody about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you're going through that process each and every time that you take a trade. All right, let's go ahead and get started. So I'm going to pull up the charts, guys. I think we're going to just spend a lot of time in the charts this webinar. So let's talk about what smart money concepts is. So I'm not sure who coined it. It's an actual like thing people say in the trading world is smart money concepts. If you go on Google and search smart money concepts, you'll find tons of things. If you go on YouTube, you'll find tons of things. Everybody teaches it a little bit differently. The people who I think teach it the most cohesively are many of you have heard of, like Lux Algo. Lux Algo has created an actual indicator that uses smart money concepts. In fact, I thought maybe it'd be a good idea to start with them. Let's pull up their indicator. This is smart money concepts on TradingView. You can get this for free on your charts on TradingView. All you have to do is go up in a TradingView chart that looks like this, and you just search Lux Algo smart money concepts, and it should come up here. Let's actually search smart money. Yeah, there it is. Smart money concepts, Lux Algo right there. And you can see there's 41,000 people using this indicator. Yeah, in fact, I think it is the most popular indicator on TradingView. So it's kind of a big deal. It's a lot of people love it. It really describes the essence of the chart itself. So I'm going to kind of go through the different things that are labeled on here. In fact, watch me turn it on and off. If I turn smart money on and turn it off, you can see what it's labeling. A lot of stuff it's labeling. It also labels what we call liquidity zones or zones of supply and demand. We're going to talk about those. But that's going to be towards the end because it's a little bit more complicated. You have to understand some other more basic stuff first. So we're going to cover that and then get into the actual liquidity zones. But this is the smart money concept indicator by Luxalgo. Again, it's the most popular indicator on TradingView, and there's a reason for that, right? So and like I said, it's free, and that's one. I guess that's one of the reasons, but this one's actually pretty legit on what it does. So let's kind of label it. Like I said, if you turn it on and off, you can see that's what it looks like. And you're like, what is it actually doing? Well, let's go into the chart. So I'm just going to kind of zoom into some stuff here. I'm going to zoom into the charts and let's look at what it's actually saying. I'm going to make this look bigger so that we can actually read it. So let's zoom in here. Okay, so Lux Algo and Smart Money Concepts, they're labeling different points on the chart. You can see right here, this says CHOCH. Right here, this says you can barely see it even on my screen. So hopefully you guys can on yours. But that says BOS. And then you've got this CHOCH right here, and you've got another BOS, but this one's red, and then CHOCH. Right here, this says EQH. That stands for equal highs. You've got this one down here that says EQL, stands for equal lows, right? So what does those all mean? Like what's a BOS? What's a CHOCH? What's an EQH? And what's an EQL? And that's, I think, all that's on here as far as labeling goes. So it's like it's a total of four things that it labels. Let's start with the one that like this one. This is probably the biggest thing that's just glaring at us in our face right here. This is a CHOCH. Um, and we could actually ask, actually, this will be fun. Let's ask the AI what a CHOCH is. So I'm going to pull up ChatGPT real quick and let's ask the AI what a CHOCH is. Um, okay, so let's go over here. I'm going to type in what is a CHOCH in Forex trading? And let's see what the AI says. Okay, so right here it says CHOCH stands for change of character, is a term used to describe a shift in the market's behavior or trend direction. This is a concept that is often employed by traders to identify potential reversals or shifts in market sentiment. So it's a trend reversal indicator. It says price action analysis. Let's see, indicates support and resistance levels. Okay. The way I'll give you a personal definition as well. So the way I describe a CHOCH is it's the first break of structure in a new trend. Okay, so and that's probably why the AI says it's a trend reversal, is um, because it is the first, in fact, break of structure in a new trend. So that's probably why the AI says it's a reversal indicator. But the way I define it as the first structure break in a new trend, and the reason why that is important is because, and I'm skipping ahead a little bit, but to me, this is the most important thing when we're talking about price action concepts. Like when we're studying the charts and your ability to read the charts themselves, the actual break of structure to me is the most important. Uh, just anything you could look at. We're talking about candlesticks, talk about trend lines. Everything hinges on which direction the market is actively breaking structures. To me, that's the most important thing. Now, there's a lot of other important things to look at too. You don't want to just only look at structure breaks, but it's very important. So when you on here, you'll see, like, for example, this one says BOS. Why does this one say BOS instead of CHOCH? So break of structure, and this is why I was saying to skip it ahead. I probably should have started here. A break of structure is the same thing as a CHOCH. We also call them chalks. A chalk is a change of character. Okay. And this is just called a boss, right? Break of structure. And this one is a break of structure instead of chalk, because the market's already in a downtrend. Okay, so since the market's already trending down from back over here, as you can see that this was a change of character right here. And then this is just another break of structure, right? When you see a BOS, that's just a continued break of structure in the trend that's already going. So let's find another one. So let's find yeah, here's a BOS right here. Why is this a BOS, a break of structure? Well, it's a break of structure because what happened before it, let's see if we can find where that change of character is. That's another BOS. Wow. Uh, and here it is. Here, wow, this is a big one. Here's the change of character. So when this market broke above this line right here, this was now considered a change of character, because now the characteristics are to the upside. The character is that the market's now trending up, generally speaking, and it's no longer trending down. And so when it makes a break of structure following a change of character, uh, that's just another break after what we already knew was an uptrend.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
Okay. So if you see a BOS, the BOS is always in the direction of where the market's already going. Okay. So, and if you see a change of character, a CHOCH, that means the market is changing direction. So right here, this is a natural CHOCH because, or chalk, because the market was in an uptrend. And now all of a sudden we have a break of structure right here. And it's the first break of structure in a new trend, right? So that makes this a change of character. Okay, I hope that makes sense. And I wanted to make it very clear that breaks of structures and changes of character are the number one thing that you should be looking for when you're studying price action. Okay. Now there's two different types of structures. Okay. Um, you have because obviously, so the break of structure is the most important thing, right? We just established that. So what is structure? Like, let's make this even more basic. What is a structure? There's two types of structures. Okay. You have what we call horizontal support and resistance, and that's all one. And then two is your trend line breaks. So when the trend breaks uh, in the opposite direction, that's a trend line break of structure. And it is always a change of character. Okay. So when the trend line breaks, it's always a change of character. So I just want to make sure it's never a break of structure because the reason why is because if a trend line breaks, you're clearly going in the opposite direction of where the market was going. So the king, if you wanted to like just make one strategy, like one price action trader strategy, you could literally just be a trader who only trades breaks of structures or changes of character along a trend line only. And that's actually not a bad strategy. You just go find currency pairs or stocks or indexes that are breaking structures on a trend line, and that could be a strategy in itself, and a very very good one too. Um, and if you think about it, a lot of the trades that we take together are based off of that very same concept. Okay, so one of the downsides to Lux Algo, I know 41,000 people are using it, as we discussed earlier, and it is the most valuable indicator as far as users go on TradingView. It does have one downside, and so if I could tell Lux Algo to make a if I could give them a ticket or some kind of suggestion, it would be to make a smart money concepts indicator that is able to look at structure breaks along the trend line. Because again, if I turn it back on, you'll see that it's making lines around support resistance areas, right? This is support right here. This is a resistance area right here. Right here, this is a support zone, right? nice support right through here. And then you got your break of structure, right? So it's always on horizontal support and resistance. Okay. But this indicator is limited and does not have the ability at the current moment to look at the trend line, which to me is the, again, like I said, the number one way to analyze the charts. And you could literally make just a strategy and make all your money just with that alone. I think if you got really good at drawing up your charts, I think you could certainly do very, very well that way. So right here, there's a trend line going on. There's a trend right through here, as you can see. And in order for a trend, we actually talked about this last week. And no, was it last week? A couple of weeks ago in the basic training call, we did a webinar on this concept. So let's draw this out. So when I draw a trend line, what's the requirement? You have to have 3 points of engagement. So we'll start here. That's one. You have two right here. Okay, that's more than halfway. And then three is for confirmation. A, B, C. C is for confirmation. Once you have 3 points of engagement, you now have a trend line. A lot of the times, people, when they're newer to drawing on their charts, they just kind of draw lines everywhere and they don't really know why or how they're drawing their lines. What I've discovered, well, actually, first of all, this was like, oh man, so many years ago, back when I actually worked for another trading company, I saw this big inconsistency from traders, both our clients and even within the company. I saw that nobody could draw a trend line correctly. And I thought this is a big issue because it's like the most important, it's like the most important uh, price action 101 thing to learn is how to draw a trend line. So I went out and like found different articles and different people that were using um, um, that people that were using different uh, price action principles. And I saw that people who were using trend lines, and I saw that the people who were being pretty consistent were teaching their trend lines as 3 points of engagement. So if you're going to draw a line on your chart, especially one that's a trend line, the way you do this correctly is you have to have at least 3 points of engagement. And it can be on the wick of the candle, it can be on the body of the candle. I've noticed that that doesn't matter all too much. It just matters that you can get 3 points of engagement and you now have a trend line. So this works. That's 3 points. I actually have a fourth point right here. I have a fifth point right here, and I get another point. I get pretty close right there and another point right there. Man, that's like five, six, or seven different points. That's really great. That's definitely a trend line. Then what happened right after? Well, it tried to come down again, but look what happened here. We broke the trend line, right? So to me, this is not only a BOS, this is actually a CH, as you guys know, OCH, change of character. And specifically, it's a trend line, which to me is the most important break of structure right there. Okay. That's more important than this was more monumental, this move right here, than a break of structure just to the upside or to the downside of some support and resistance. This is more monumental than anything else you can read on the chart. So if that happens, all of your reversal indicators in your mind should go off and start to tell you, hey, it's time to look for sells now, as soon as that happens. So this is a prime example of what we're talking about right here. And so as soon as this happened, I'd now start to look for liquidity zones, places where you could sell. You know, this actually looks like a liquidity zone up here. It doesn't look like the market. Well, actually it did. It looks like it came right to it. It came right to it after. In fact, if we do a rewind, you can actually see that the market, after it broke this structure, it went right to that liquidity zone just before it, there it goes right to it, and then it falls off the cliff afterwards, right? So that's a really good example of what we're talking about. So here, let me go ahead and put this back. Let's find one more example like that because it's really important that we get this concept. because a lot of people look at charts and they're like, how do you read that? What does that even mean? And it's like, this is how you start. And not only how you start, but this is not only just how to start reading the charts, but this is the most important way to read the charts. Okay. Um, yeah, here's another really solid example just on the opposite side right here. Let's draw our trend line out. So right here, I'm going to draw from here down, and I need at least 3 points of engagement, like I said, to make this work. You could even start on the bodies. Like you don't just have to go on the wicks if you don't want to. The bodies would work just fine. So you could do this. I was also going to draw, it looks like there's actually a couple of trend lines along here. It looks like um, this was a trend line right here. Let me fix this. Okay, so looks like there was a change of character right there and one right here. Notice what happened to the market each time. Here, in fact, I'm going to type this out. CHOCH. Notice what the market did each time it broke this. The market subsequently started to have moves to the upside because it was going down and down and down and down and down and down until about here. This is where things started to shake up. It did go down one more time, then it came up. And then pretty much from there, it just started to form this uptrend, right? These are the beginnings of an uptrend. See, a lot of retail traders don't know how to read this. They look at this and they're like, I don't know what that means. In fact, I'll just keep selling it because it looks like it's going up just in time for it to go down again. When in reality, the market's actually starting to build a new narrative to the upside. This is the beginning of said narrative, right? Um, let's see if we can find another solid example of this. Yeah, like right here. Here's another good one. Like this is a nice little trend line to the downside. Looks like we can get the 3 points of engagement. I've got one right here, one. We've got another one right here and another one right here. That's 3 points of engagement. That's a trend line. I get a break in that line right here. As soon as that happens, we're now buyers. We're no longer sellers as soon as you see that right there. Very interesting stuff. This is like the number one way, in my opinion, to read the charts. Okay. And you could take it a step further, right? Like this would be your change of character right here. And then it looks like we actually broke this resistance right here. Okay, this would be a break in structure, just a regular old BOS right there. That's just a BOS. And so after this, any little pullback you get into a liquidity zone, which it looks like it did, it found some support in here, would be you would want to buy. As soon as you saw this, in fact, let's rewind this. Let's go back. As soon as you saw here, let's go forward one candle. There we go. As soon as this happens, it's all buys from here. Okay, because you got to change a character, you got to break in structure. Any dips you get into some major demand should be a sign to start to look for buying opportunities from here on out. Okay, which it looks like it actually did go and find liquidity kind of in this area right through here. Um, that would have been a tremendous buying zone right there. And we'll talk about how to find those buying zones. But before you can find buying and selling zones, you have to be able to identify the structure and then the break of structure. What type of break of structure is it? Is it a trend line break of structure? Is it a trend line break of structure? Is it horizontal support resistance? Is this a change of character? Is it a BOS? What type of it is? Because all breaks of structures matter, but the ones that matter the most are going to be your changes of character. Okay, just your chalk is going to be the most important one. All right, so I think that pretty well covers the concept of change of character and break of structure. And then if I were to give you guys a test or a quiz, I would ask you on the quiz, what is the most important change of character And I'd be like true or false, like a horizontal support resistance or a trend line. And I hope each one, or I guess it wouldn't be true or false, it'd be just A or B. Which one would you pick? And I'd hope you'd pick the most important one would be a change of character on the trend line itself is more important than even just to break a structure on support and resistance. Okay. Um, and I guess the science behind like the why behind that question would be because when you break a trend line, um, when you actually break a trend line, um, it takes so much capital to be able to do that because you're changing the characteristics of what the market was doing. Before it was going down, now it's going up, or before it was going up and now it's going down. And it's going down in such a way that the very springboard that the market was using as it was going up has now broken. The market's not very forgiving to that type of thing. It's very difficult for markets to return to an old trend after it's broken that trend. So it has to give credence to the new direction for some time before it can continue to go back up. Like if the stock market breaks a trend line to the downside, that's why you'll often hear traders on Wall Street, they'll say like, "Oh, the Dow broke below 100 EMA or 100 or 200 SMA or whatever," because if it breaks below those psychological zones, it takes an extraordinary amount of capital to do that kind of thing, and if it does that type of thing, then it's very difficult for markets to recover that. And so you're in a new type of market. It's a bearish market or it's a bullish market when that kind of thing happens. We just try to do this on a day-to-day basis, which is pretty cool. So so now I want to spend some time the next 10 or 15 minutes, and we'll probably wrap up on this topic because that will conclude our smart money conversation unless you guys have more questions. But the next 10 or 15 minutes, I want to show you how to find those zones now, where to actually put your buy, where to put your sell. Once you know that the market's broken a type of structure, where do you get in? All right, that's the big question. Uh, anybody can find a structure break, but can you find a place that makes sense to be buying and selling it? Okay. So we can just use I've been just using this pair as an example just because I had it up on my chart. There's no particular reason why I've been using this. It's just because I had it up on my chart. So that's what's cool is you can use anything to explain this concept. So let me go back in time and let's find a clear example of and even unclear examples too would be fine. We can just use anything that makes sense. So let me see if I can find a trend break of structure and we'll go ahead and set this up together. Let me find one that works pretty well. Um, Let me see if I can find a nice trend line. That's what I'm trying to find right now. Okay, so let's see. Is this? Yeah, this is it right here. This will work great. And I'm sure I skipped several, but I think this will work just fine. So right here, this is kind of an interesting market. This had a trend line right through here. I'm going to draw this out. At least it appears so. Yep, right here. So we've got a nice little trend line right through here. Um, yep. And let's make sure that this is actually a trend line by pointing out our levels of engagement, right? So this is one. That's one. Right here is two. Right here is 3 points of engagement. Here's 4 points of engagement. So already that's a trend line just by having those three, but we've got four here, which is great. Then something interesting happens, right? What happens right here? That's a trend break of structure, right? So we call that a change of character, right? So if you have a break of structure on a trend line, it really is just a change of character. I wouldn't like if I were teaching this as a professor or something, I probably wouldn't dock somebody for saying that's a break of structure. But if you think about it, I think that change of character is a more appropriate name because it is the first break of structure in a new trend, right? So it's a change of character. All right, so great. So if you've identified this, where do you get in now? In fact, let's do a rewind. Let's do a rewind back to, I don't know, here we'll say. Okay, so where would you get in? So what I like to do is when I'm trying to, once I identify this, this is half the job. The other half of the job is trying to find a good place to get into the trade. Okay, so how do you find that location? So what I like to do is I like to find like what caused this change of character? Like what's the consolidation or the last known high or peak where this change of character began? Well, this takes me back to basically like this area right up in here. Okay, so and actually I'll include this as well right here. So this basically these two areas are what created this change of character. So you had this nice, beautiful trend line. It was going up for the time it was, and then you had this uh, massive change of character. And again, it takes an extraordinary amount of capital to be able to create a breakage structure like that or a change of character. So what I do is I follow the market backwards. So if you don't know how to find liquidity, here's a tip. You just go backwards from where the structure broke and follow it backwards until you arrive at some kind of turning point or a consolidation. In this case, it's more of a turning point because the market came up, made a high right there, and then turned and then subsequently broke the structure. So this would be liquidity right here. This is a liquidity zone. I'm also including this up here because it appears to be a level of liquidity. There was a massive move down right here. So I'm basically just saying, hey, this is my like first liquidity zone, but I'm also going to include this right here just because whatever happened up here just above it also caused a massive move to the downside. So that's why I'm saying that this is probably your primed location for a sell. So now from here, it's pretty simple. You just go ahead and place a short position at that level of liquidity. You put a stop loss at the above the liquidity zone, and then you could write this down. I'm not necessarily sure where we're going to put this target. I'm just going to put it down here for now, like somewhere down here with these old lows down here. We'll just put it there. So this would be an example trade setup. And then if you fast forward here, you can watch this thing play out. It literally came right up to that liquidity zone. Here it goes. But whoa, that actually worked great. Dang. That was awesome. So this is perfect. It looks like you could have made a lot more money on this trade. Dang, dang. So, but this is perfect because it's like the 1, 2, 3 step model. It's identify structure. What's number two? Number two is identify the break of structure. In this case, it was a change of character. And then the third thing you got to do is find the zone of liquidity where that would make sense, like where it makes sense to actually place the sell or place the buy, right? And so again, if I were to quiz you guys on this, what's the king break of structure? It's always going to be a trend. Okay, there's breaks of structures happening everywhere on every time frame on every financial instrument out there, but the number one break of structure is going to be your change of is your change of character on the actual trend itself. Okay, so a break of structure along the trend line is most important. And then identifying the area where that structure initiated from is liquidity. So let's find another example of liquidity. Let's go back in time again, and let's go ahead and find a um, where this. Let's go find another example. So like right here, in fact, I think I see one right here. This appears to be some kind of yeah. This appears to be a trend line right here. Yeah, like right through here is a trend. And how do you draw your trend lines again? How do you draw trend lines? So no, this is step number one, right? In order to draw a trend line, you need at least 3 points of engagement. Okay. So we have at least one right here. We have two here. We have a third point of engagement right here. That would now be a trend line. And anything beyond that is just gravy, right? So you have four right there. And then you have a fifth one right here. Okay. And it can go through wicks. Wicks are fine. One of the rules when you're drawing trend lines is you can't draw through bodies. Okay. So don't draw through the bodies. Um, you can draw through wicks, but not through bodies. Um, and then this would count. This would definitely count. You've got 5 points of engagement right there. So that's step number one. Step number two is to point out, and I think it's good if you guys point them out yourself on TradingView or some other platform. So I like to use this arrow and I actually draw out where the change of character or break of structure took place. And I'm going to also type it out just because I like to see, I like to keep this on my chart so I know why I'm doing certain things. So there's your change of character right there. Okay. Then what's the next step? The next step is to find the place where, um, like what created this, right? In fact, let's do a rewind here. I'm going to do a rewind. Let's do a rewind mode. Oh, hopefully I didn't mess all that up. Where did I go? Let's go back. I guess I'm gonna have to go back. Oh, here it is. Okay, good. There it is right there. That's what we were working on together. Okay, so let's do a rewind back to um like right here. So let's say you find this as it's breaking structure, the change of character now manifests itself right here. So what do you do? So that's step two. So step one is drawing the trend line. Step two is to draw where the structure broke. And then step three is to find a place where you can trade it. Like what, where's a natural place to trade. Okay, so what I like to do, and there's two ways to do this, to get to step three, because what's the whole goal of step three is to find the liquidity, find the area of supply or demand that caused the break of structure. Okay, so there's actually a couple of places you could do this. So one, you follow this backwards. You follow this backwards until you find either one, the consolidation that created the break of structure, or two, a turning point. I see a couple of possible places right through here. So this is kind of a consolidation area before this thing just fell off a cliff. Fell off a cliff. It actually just fell off a cliff like right here. It was just red candle after red candle after red candle after red candle. Before this, it was a mix of blue or mix of green and red candles right through here. So this would be a liquidity zone. Another way you can do this to get some help is you can use those order block indicators to see if there's actual liquidity in that area. So here's Smart Money. Smart Money has, from this one, Lux Algo, they have two or three blocks right in this area. So you know that's liquidity just by using that. We already said that without even using the indicator. We kind of said that this is consolidation right through here. So this would be liquidity in this area. And then when you turn on Smart Money, it says the very same thing. They're actually saying that all of this is liquidity as well. And then if you turn on Sonar Lab, let's see if Sonar Lab has blocks there. From what I can see, they don't. That's okay though. I just thought they might. Okay, so that's a liquidity zone. So you could just go off of this. And so now that you've done step three, now it's just a matter of putting your trade together. So what have we done up to this point? We identified structure. One, two, we found the break of structure. And then three, we found the liquidity. How did we find the liquidity? You just follow the market back from where it broke structure. So you follow this backwards. Here's the structure break. And then this happens to be the area where structure consolidated or either turned or started to turn before it came down. So this would be an area of liquidity, and you can cheat up a little bit. How can you cheat? And it's not really cheating. It's just using things to your advantage, right? You can use these Smart Money or you can use order block detector to find that as a zone. So this would be a perfect little first retracement trade, and you would place your short somewhere around here, type of thing, and then you would put your stop loss up here above the liquidity zone, um, and then you would bring your target down to wherever you felt like it would make sense. This one you usually have to go find liquidity as well, a zone of liquidity. I'm just going to leave it at just a 1-to-3 RR ratio, and let's see what we do. Let's see if we can make this work. But then let's fast forward and let's see if this trade does that. So right there, it literally came perfectly to that liquidity zone, and now it's on to the races. Let's see if it actually finishes the job. I'm not sure if it does, but there it is. Done. Finished the job right there. So it came down to the 1 to 3. But yeah, so like these are my favorite traits. Like of all price action trades, when people talk about reading the charts, this is how I read the charts. And I think this is the most simplistic and the most valuable way to read the charts. You could almost ignore everything else about the charts. If you knew how to do those 3 steps perfectly, I, I personally believe you wouldn't need to do anything else. Like you could trade other things. I mean, there's so many ways to make money in the markets, but if you wanted to actually just read the charts and just go by charts alone, this is how I would do it. Um, yeah, just find the structure, find the break of structure, follow the market backwards, the liquidity. And then as long as you knew how to put in good risk management, good RR ratio type of thing, it should work just fine. So why did this happen? Like, why did this work? Like, why did the market even do this? So what happens is when the market's kind of consolidating in liquidity before it breaks structure, all these traders and banks all around the world, they see this. They see the same thing that you're looking at. They see that break of structure and they're like, oh, I was buying this thing and I'm going to lose my shirt here. Here, I'm going to say no to that. I'm going to lose my shirt here unless I can get out of this trade. So, what traders do is if they were buying back over here when the market was in an uptrend, if they had buys over here, this is their last chance to get out. Okay. So what they do is as soon as the market comes up to an acceptable liquidity or acceptable price where most of the trades or transactions took place, the order flow was pretty heavy in this area because that's where the market spent most of the time. As soon as the market went back to that area after it broke the structure, it's very likely to pull back because if a buyer closes their buy, they're selling now, right? They're now sellers. And then people like you and me who are opportunists who didn't have any interest in this currency pair until it broke structure, we also come along and we also start to sell right here too. And so you get the people who were in it before, they're losing money. They now compromise with the market and close out their buy for a loss or break even. And then you have people like us who come in and also sell this as soon as they see this break of structure. And that's why the market just falls off a cliff after it gets even remotely close to that entry. So this is the essence of reading the charts. This is how you should be reading the charts, in my opinion, and it will help you a ton in taking future trades. I think unless you guys want to, we could do one more example. We still have a little bit of time. We could do one more, but I'm probably going to wrap up here. This is all I really wanted to cover today, just to help people give them a leg up on reading the charts. Um, yeah, so we can do one more if you guys would like. Let me see if I can find one that makes sense. Pretty much anything that breaks structure would work for what we're doing. I've noticed the steeper. Oh, let me give you another tip here, though. This is a different tip, but when you're drawing these, the steeper the trend line, the harder it is to get the market to go back up to liquidity. So you'll notice with these, like, so here's kind of an anomaly right here. This is kind of a steep trend line. So with this one, this is actually a really good example. So this is kind of a steeper trend line. And, you definitely have structure here, right? That's definitely a trend line. Let's draw it out together. Just let's go through the process together. So this is step number 1, right? And we definitely, okay, so step 2 is to find the break, and that happened right here. So now you're thinking, okay, now we're looking to sell because we've broken to the downside, right? Okay, let me draw it. So this is a change of character, right? And as soon as this happens, you're thinking, okay, now I got to find liquidity. Well, with this one, the most natural place of liquidity probably is like in this area right here. In fact, let's do a rewind to this spot. Um, let's I'm going to show you guys how to do this. So, um, this is a really good one to see because they're not always picture perfect. So let's go back. Here we go. pretty steep trend line as you can see. So let's zoom into it, see if we can make this work. Oh, and then I want to do a rewind to this particular spot. Okay. Okay, so let's say you see this and you're thinking, okay, now I'm looking to sell here. Sometimes when it comes down this aggressively, it's hard to get the market to go all the way back up to that liquidity zone. It's a tough thing to do. So you have to kind of compromise with the market and find different zones of liquidity to be able to get it to work just right. Um, but nonetheless, if this is what you've drawn out up to this point, you're doing a good job because you're doing exactly what we've talked about. Um, Here, I'm going to put this right up in here. There we go. And so putting a sell order, so now that you've identified like, hey, this is kind of a consolidation zone, my guess is if you turn on the smart money indicator, it would probably have, yep, there you go. You've got a couple of order blocks right up in there. That makes sense. If you turn on Sonar Lab, um, there's actually not any. That's okay up in that area. That's okay. But with smart money concepts, there definitely is order blocks up in there. So what do you do with this one? So with this one, um, you could certainly still do that. You could put your sell right up here, put your stop loss up there inside of that, and then just wait for this to come down. Well, first you got to wait for it to go up first, tag the liquidity, and then just fall off the cliff. But it may not do that, right? In fact, I think if you fast forward, it didn't quite get up to that zone. In fact, it kept going down for a little bit. It does come up though. It tries to tag some liquidity. I think this one just went down pretty hard. Oh, there it goes. It tags some liquidity and then proceeds back to the downside. So what did this actually tag right here? Like, why did it stop right there? So this is what we call an imbalance right here. So if I go backwards, let's ignore this real quick. What are If you were setting this up, what are some alternate areas you could have sold at? So let's delete that liquidity zone. Let's say you didn't use that one. What's an alternate zone? Well, if this is pretty aggressive coming down, which it was, you have to typically use an alternate zone. So I don't see any liquidity along this. So where's an alternate zone? Because if the market comes down so quickly, we call that an imbalance. It's an inefficiency. You just have bear candle after bear candle after bear candle, just so aggressive to the downside. So you have to compromise and use a different level. So if this is your normal liquidity, you might not be able to get this price just because the market's so aggressive. If it's that aggressive to the downside, sometimes you can't get that price like we did in the previous example. So what other price can you get? Well, you have to go back in time and find areas of where liquidity was. So back over here, this was a major consolidation zone, kind of in this general area right through here. Okay. This was consolidation right in here. Okay. And so that's where the market spent most of its time before it went up again. Okay. So if the market spent a lot of time in there, that's a good chance that that's a liquidity zone. And I think if you come forward, yep, it did. It went right. This market went right to it. You can see right there, came right up to this area and then went down. So that would be a way to compromise. Like if this thing comes down so aggressively, this would be an area in an imbalance zone where the market would likely come up to, which it did, and then it would just tag off in that area and then come down. So um, it's kind of crazy how picture perfect that was actually, how it came right to that area. So if you were to do a rewind on this, instead of going up with this higher liquidity zone up here, you could instead place your sell, like right there, stop loss right here type of thing, and then do a 1 to 3 RR ratio or something better if you can. And then this triggered right there. So you can see it came right up, boom, came right down. That's one way to do it. This one's a little more tricky though. It's not as cut and dry as the other one that we just looked at. It's more tricky, but it's a great little setup. I have a video I made on imbalances that you guys can watch. Let me actually find it real quick. I think I put it on YouTube. Let me actually go to my YouTube real quick. I'll give it to you guys. I think it might even be on the website, but let me go find it real quick. Let me go to my view your channel. Um, it's in videos, and I think I made it like a couple months ago. Let me find it. Here it is. Supply and demand imbalances will make you profitable. Yep, this is a golden video to watch right here. This explains the anomalies that we were just talking about. So the anomalies where like you can't just go with this higher liquidity. If you have a market that breaks structure that aggressively, you're not getting back to this area. So you have to settle with an imbalance zone instead. And this video that I have for you guys will explain to you where and how to find those. Um, this is like perfect video on how to find those compromise zones. So um, it's called an imbalance or an inefficiency. I actually want to show you one more example of an inefficiency so you guys can see what that looks like. So this is kind of your anomaly, but I think it's really important to see that. Yeah, this is actually a really good one right here. Yep, this is perfect. Okay, so um, yep, actually I see two really good ones. Dang, this is great. Maybe we'll how do I want to do this? Um I'll show you both. I'll just show you both. Okay, let's look at this one. Okay, so this was a break of structure right here. The couple you actually have a couple. This you had a trend line break over here. Um, Let me draw this trend line out a little bit better. Okay, and then you also had this horizontal break in structure right here. Okay, so this market broke structure in two different places, right here and right over here. I'm gonna just focus on this one right here. This one was just so aggressive. Okay, that's probably a news event or something. I don't even know. But this was just so aggressive. And everyone, you guys should agree with that, right? Let's just call that a BOS, okay, very aggressive break of structure. The market went up. So now you're thinking buys, right? So how do you get into a buy? Well, after you identify the break of structure, the next thing you got to do is find the liquidity zone. So this would be a liquidity zone right here. Okay, that would definitely be a zone. Why is that a zone? Because this is a place of consolidation before the market shot up. Now, the thing is, with how far it shot up, are you really going to place a buy down here, right? Let's say the market's now currently up in this area. It doesn't make a lot of sense to have your buy all the way down there. Probably not. So you have to find that's how you know I need to compromise my entry. Like I need to find an imbalance zone instead. Well, look at this. Look where the market dipped to right here. Why did the market come right there before it went up again? And why did it come right there? If you were to draw a box on this, let's do this. Let's reverse engineer this backwards. Why did the market come right to this area and then go up? Well, because this area was an area of, in fact, I was going to include this whole thing right here. Um, so whatever happened inside of here is ultimately what led this market to breaking the same break of structure. So like this is structure right through here, right? If I extend it out, it's the same structure as this, but this time it broke the other way. So you have that same structure, but it broke to the downside. What's liquidity before this thing broke to down? Well, whatever happened in here inside of this area is what ultimately created this, right? So that would be liquidity. That would be a fantastic area to compromise in imbalance that happened right here. Okay, because the liquidity we want to use is down here. We wanted to use this, but I clearly can't use it because it's so far from the current price of the market. So I have to compromise that zone. So I have to find an imbalance that makes sense. This would be it right here. Right here. Okay. So it's going to take some time to get used to these, but here's what I want you guys to do. Here's a homework assignment. I want you guys to find either just normal breaks of structures, um, whether that's trend line or horizontal break of structures. And I want you guys to send me your 1, 2, 3 step analysis where you find the structure, find the break, then find the liquidity. Show me your mock-up entry, send it to me on Telegram or email it to me. I'd love to review it. Now, I'll give you a bonus point if you guys can find an imbalance opportunity, because these are a little bit of an anomalistic trade setup, but they're absolute gold if you can get it just right. So if you guys can find those, I'd love for you to send them to me. And um, and here's another way to I'd love to review it with you guys, but here's another way to figure it out. Ask yourself a question each time you go, like draw circles on these charts. Like ask yourself, why did the market come right here and then go up? Why did the market go right here and then go down? Like look at the biggest pivot points you see on the chart. Here's a big pivot point up here. Why did the market go right to there and then come down? You'd probably have to do some homework and find out, okay, what's over here that caused the market to go right to that spot and then come down. But I know if you spend the time doing that, you're going to learn a lot about the charts. You're going to learn a lot about reading charts and understanding them. Okay. All right, guys, I'm going to go ahead and wrap up. Appreciate each one of you. Thank you for coming. Have a fantastic rest of your day, and we'll see you guys in the next webinar.